how to place your first day trade. We talk about standard deviations, day trades, different opportunities in futures all the time, Mikey, but I wanted to go A to Z with you, who is a relatively newer trader to day trading. And I hear your platform, as a coworker of mine, your platform's been going off more recently than it has in the past. And so I thought, who better to walk through a first day trading experience than yourself? How have you been enjoying your first day trades recently?
Yeah, this week has been really solid. I don't think there's any better time to get into the market than now. Once you kind of know the basic rules, I would say, or some guidelines, some pointers, and a little bit of a checklist. The products have never been more accessible or less expensive. The technology has never been better. And yeah, it's been a really solid week with everything going on geopolitically. I'm just staying small, but having a nice reason to be engaged with all this activity. So I've been trading everything from dollars to rates to oil to precious metals, and it's been good.
And just to clarify, Mikey, is everything that's great that's been going on is in terms of the price action we've been seeing from the geopolitical tensions and everything else, right? Like, of course, the news is not super optimistic or exciting, but we are seeing this is a great time, like you say, Mikey, because we're seeing a ton of back and forth, all of the unknowns that, Putin and a lot of people are throwing into the worldwide economy creates for markets in crude oil, in gold, and a lot of different places that are just like, where should this thing be? Like, if this is a really serious, if of course it's a serious problem, if it's more serious than we thought, then crude oil might need to be $130. And, gold, I'm going to dump out of my stocks and start buying gold. Gold might get to 2,500. All of those unknowns make for a great environment to be day trading and everything else, because you're seeing just markets up big and then down to unchanged and then down on the day in some cases. A lot of two-sided trade, like we say. And to your point, markets have never been more accessible as well, with the technology being great from your brokerage and your platform, and products being smaller and more accessible. And you have more information at your fingertips, especially if you are a member to the small exchange. You're getting standard deviations on all the products. And I want to walk through what these are and how to use them. Day trades are often a function of the standard deviations. Whether you're following trends or you're contrarians like ourselves, you're usually, as a day trader, looking at these ranges. And when a market gets outside of one SD or two SDs or three, that's when you're sensing opportunity in the market. And we can walk through here, Mikey, how it's as simple as looking at these values for a product like the 10-year yield, which is a really accessible one, only a couple $100 in buying power, and as a daily move about 50 cents, which is $50 per contract. You compare those standard deviations to your watch list, pretty straightforward stuff, right?
Yeah, this is really the kind of push that I needed too, because I think a lot of people get overwhelmed with the price data. It's like, oh my gosh, Apple is going up or Tesla's going down. Like, what are the levels? What are the reference points? How do I set my context? When do I know if a market is extended or below kind of where is normal? And the standard deviations have been a hugely useful tool for me, because I can just create my watch list, scroll through it in the morning or throughout the day, see where products are relative to those standard deviations, and make decisions based on that data. At the end of the day, it's a data-driven decision. It's not my gut feeling like, oh, I think Apple should be lower, I think it should be higher. It's, hey, where are we relative to the historical moves? And then can I form a trade based on that, knowing the statistics lean towards a reversion? And this is exactly how I have it set up in my platform. I look at the percentage change as well, but you could just compare this daily change to what is the normal standard deviation as provided in the newsletter for community members, and make your judgment calls based off that. It's essentially what I've been doing for the last week.
And it makes it makes your decision-making process, first of all, less emotional, but also just like faster. A lot of people recently have been asking me, what algos do you have set up? What alerts do you have set up to get in and out of these positions? And I'm like, I've got, my 10 or 20 products that I look at on the futures side. Small exchange's got 10 of them. And then maybe I'll look at some, micros and a few other things in there. And I have the data from the small exchange newsletter. I mean, of course, I have the PDF that goes out to the members, but also I just kind of have it in my head because I am the one crunching these numbers. So I kind of have them subconsciously. And then it makes it really quick to just be like, a lot of people think, well, it must be this like tedious process of you crunching all these numbers and checking all this stuff. I just have the daily net change up and I can quickly go through and see, okay, SM75, my standard deviation on that right now is about $1. Yesterday, it was up $1.70. I'm looking at selling. SMO standard deviation is $2. Yesterday, it's down $3.35. I'm looking at buying SFX yesterday, up 60 cents. Standard deviations 40 cents. I'm looking at getting on the other side of these things by just comparing the standard deviations that I have to those daily net changes. And then management also, Mikey, is a function of this stuff as well. If it's above the standard deviation, like I say, I actually have this crossed up here. If it's above the standard deviation, I'm looking at selling. And if it's below, I'm looking at buying as a contrarian. But what I just had there on the slide is for, trend followers would be doing that. It's totally up to you. But say this market gets outside the one standard deviation move, Mikey, and I sell it, I'm usually looking to try to take profits when it gets back into, half of that standard deviation or just back inside that range. I've got the probabilities. When the market gets outside, I'm putting on a high probability trade. And when it comes back inside, I'm managing.
Yeah, that's exactly right. And for me, it's been mostly one lots. Like I'm totally cool with that as I kind of pick this stuff up and get used to the market liquidity and kind of what these ranges are, especially given the heightened volatility across all asset classes today. But what's also been super helpful is managing losers, which I've been doing extremely diligently and just especially well this week, knowing that if a market is outside maybe 1.5 standard deviations and I sell it and I expect it to kind of come back maybe to even, let's say it's $50. If the thing moves against me, I've been very adamant about just closing the position when I'm down 40 or $50. Like I don't need to hold on and say, oh, it's going to maybe reverse. All of that feeling is removed completely by referencing the standard deviations and just knowing ahead of time what my profit and loss targets are for every trade. Because I'm only really holding them for the day. I carried some stuff overnight, but really the goal with all of these trades is in and out within a single trading session. And I just try to stick to those numbers as best I can.